Hello traders, welcome to my channel. In today's video we'll be looking at multi-time frame analysis. I've been getting a lot of questions on how to get the direction right, because to be honest, sometimes you see the direction going bullish, next you go to another time frame, the other time frame is going bearish, you go to a more lower time frame, the time frame is going bullish, and so on, and that can make you to get confused. Okay, now I have a kind of blueprint that I'm going to share with you in this video that will help you to become a better trader in terms of understanding the direction of the market, be it if you are a swing trader, an intraday trader, or scalping, or you trade all just like me. I trade all. There are some setup I hold for days, for weeks. There are some that I just go in and out of the market, and there are specific things that I need in terms of time frame analysis, multi-time frame analysis, to to be able to catch the market move. Okay, so a multi-time frame analysis is simply the analysis of a currency chart or a financial asset from the monthly down to the lower time frame, even to the minute and even seconds based time frame. Okay, that means you go to the monthly time frame, monthly, okay, you go to weekly, daily, 4 hour, 1 hour, 15 minutes, 5 minutes, and so on. Okay, and so on, in order for you to be able to understand the direction you have to take. Okay, and also your trade setup. Now there are three things you need to look for whenever you're doing top down analysis. Okay, when you are doing top down analysis, these three things should be in play. The first one is the market direction. You want to understand the direction the market is heading to. Okay, the direction could be an impulse or it could be a retracement. Sometimes impulse is, you can change this to become an expansion leg. Okay, that's the impulse leg, the leg that broke structure. Okay, impulse, or the retracement back to the point of what? Interest, retracement or pullback. Okay, for example, if you have this play out, okay, regardless of the time frame, okay, if you come to the monthly time frame and you see something like this plays out, market broke structure and then probably testing a particular point of interest, then you should be anticipating what? A pullback. Okay, you'll be expecting what? A pullback. In that case, this pullback you're anticipating is what? Your direction. Okay, you're expecting that, okay, this market, since it has gotten to mitigated a point of interest, okay, up here, okay, then you should be anticipating the direction to be what? Bearish. So in that note, your multi-time frame analysis on the monthly is what? Bearish, even though it has an overall bullish setup. The direction is not bullish. Okay, even though it has an overall bullish setup, the direction is not what? Is not bullish. The direction is bearish, because if you are looking, because you've seen a break of structure now, you say, oh, this is a bullish move, and you start hunting for buy, you'll be in a loss, because the direction of the monthly is in a pullback, a retracement. Okay, is in a retracement. So a retracement simply means you are expecting price to do what? To trade lower. Okay, so your direction in that instant, is what? Is bearish, up until maybe you identify a kind of order block here. Okay, order block here. Okay, when price gets in here and probably maybe you have some form of confirmation what you are looking for, you can then anticipate that, okay, on this note now, our direction is what? Bullish. Okay, regardless the time frame. Okay, I'm only using this monthly example to explain what I'm saying. If it is in the daily broke structure, but you're expecting a pullback, your direction is what? Short. Your direction is not bullish, because when you look at that, you will you are going to be trading at the wrong side of the market. Okay, so by multi-time frame analysis, you want a situation whereby two things. Is it that you wait for all the time frame to align into that direction of the higher time frame, or you can also trade what is called counter trend opportunity in the lower time frame. Why? Because the market moves in a zigzag manner. Okay, market moves in a zigzag manner. In this case, this could be the daily. Okay, this could be the daily. Daily is doing something like this. Okay, and so on. Okay, let me stop there. Let's change this to red. This could be daily now. Now pay attention. The monthly leg, impulse leg, okay, we create series of higher highs, higher lows in the daily up until this point. Okay, now because you are looking for what, in this case you are expecting, maybe this is where you stopped, okay, and you saw the market at this point and price was already getting low up. What you'll be looking for is to find alignment. Since the monthly time frame is bearish, from your analysis you see that, okay, the price is expected to get here and we are somewhere here. And then in the daily, okay, most people will trade, we try to look for what, buy here. But when you notice a break in structure, a shift in market structure, you can start selling in your daily time frame. Let's assume that is your setup for selling. You can start selling from there. Once because price has broken structure, trades back in here, is now in conformity with the monthly. Okay, both monthly and daily are in the same direction. This is a high probability of trade, because you know that the monthly is heading lower. Definitely this daily should also be heading lower, so therefore you look for a sell opportunity here to take the price low. Okay, so we are going to be looking at the directional market direction, the directional bias. Is it an impulse leg or a retracement? It doesn't matter. If it's an impulse, we look to trade that way. If it's a retracement, we look to what, to trade that way. Now also we have to look for a time frame for setup. Okay, we are going to identify time frame from direction, that this time frame is only for direction, like the monthly and weekly. They are simply for direction, because you cannot take your trade from there. The pips where your stop loss will be very massive. We could be talking about 200 pips, 100 pips, 200 pips, 300 pips, and depending on the currency pair. Okay, so that time frame is not good for setup. Okay, they are not your setup time frame. They are only there for direction, to tell you, okay, we are expecting price to go this way. Okay, now your setup time frame should show you what do you want to see. Okay, in the retail mindset, they'll be looking for, okay, let's look for double tops, double bottoms, MW pattern, and so on. Okay, that is your setup time frame. And when I see this setup, this is what I'll be looking for. This is where I'll be buying. This is where I'll be selling. Okay, as smart money trader, we'll be looking for a setup that a break of structure. Okay, if the setup we are looking at, the time frame we're looking at for setup now have what, a significant break of structure, we can then identify what, the POI, the break of structure, the liquidity, and so on, to use in what, in our trading what plan. That, okay, this is our setup now, and when price gets to this level, I'll be buying. When price gets to this level, I'll be selling. So you should have a time frame for what, setup. Okay, number one, time frame for what, direction. Number two is time frame for what, setups. Then number three, you should have time frame for what, your entry and your confirmation. Okay, so these are the multi-time frame, 1, 2, 3. Even though you are going from the monthly down to the 5 minutes time frame, you should be able to break them down into these three categories: direction, setup, entry. This is the only thing you need to know when it comes to multi-time frame analysis: your direction, your setup time frame, and your entry what, time frame. Okay, so I'm going to show you the different time frame for different traders. If you are a swing trader, this is what you go for. If you are a intraday trader, this is what you go for. If you are a scalper, this is what you go for. Position trader, I don't think most people are position trader. Okay, these are people that hold position for more, and the banks are the ones that really trade that way. Okay, so in this case, you are going to look at the time frame for a swing trader. If you are a swing trader, these are the time frames you'll be focusing for direction, setups, and what entry. Now, for a swing trader, your monthly and your weekly time frame should be used for direction. Okay, should be used for direction. Okay. As at when I'm recording this, I've not gone through my chart to do a form of trade entry. Okay, I've not done such. So now let's go to the pounds USD. Let's go to the pounds USD for this example. Now in this case, for a swing trader, this video will be a bit long from the way I want to explain it. I want to explain it so that you understand it. It will be a bit long. So from the monthly time frame, okay, we can see that the month, this is for pounds. Let me use the replay tool. Okay, let's see from this monthly this. Now let's assume price was here. Okay, now if you go to the monthly, let's see what the monthly is saying. Now from the monthly, you can see there's a break of structure here. Okay, and we're expecting price to trade lower. Okay, the first point is this low here. Is to take this low. Why? Because this low fails to break structure. So you can decide to say, okay, this low is where I'm targeting. Now your direction will be what? Is a retracement. Remember, this is a break of structure. This is a break of structure from here to here. So this move down is a retracement. So up from this point here, you should be what? Looking for selling opportunity. Your directional buyer should be what? Shorting the pounds USD on the monthly time frame. Okay. Then if you move to the weekly time frame, you can see the same thing plays out here too in the weekly time frame. Why is this a target? Because this target, this low, fails to break significant structure. So on that note, you can start hunting for sell from this point here. Okay, you can start hunting for sell the moment price trades into this other block. Why? Because this other block broke structure. Okay, broke structure, then price is at this point when you saw it. So from here, you'll be bearish on what? Pounds USD. Now the monthly and the weekly only tells you their direction. Okay, sometimes you can put the lipstick of what setup on it, areas where you expect price to go in. Why? Because I cannot trade from here. This is 135 pips stop loss. No, I won't be doing that. Okay, so what you need to do is to go to a lower time frame where you will see a better setup and a better entry. Are you with me? So based on this, as a swing trader, your monthly gives you and weekly gives you what? Your direction. Now your daily and 4 hours should give you your what? Your setup. Daily and 4 hours should give you your setup. Why? Now the distance between your direction and your setups should have not less than 12 candles. Okay, not less than 12 candles. Daily, we have what? 30 days in a month, so we have enough candles to give us a setup. The same thing with 4 hours. But daily with weekly, if you are using a weekly POI, your daily time frame will not give you a very good setup, because a week you only have 7 days and it's too small to gather or to get a trade setup. Okay, the minimum should be 12 what, 12 candles. Okay, so in that note, if your POI is in the weekly, your 4 hours should be the perfect place to get your what structure, okay, your setups from. Likewise, the 1 hour for entry. If your 4 hours is your setup and you're waiting for a confirmation in 1 hour, you are going to miss the trade, because 4 hours, 4 candles will only be formed for a particular 4 hour. So you need more candles. And in that note, you should be aiming for, and that's why I say 1 hour and lower. So you can be going to what, 15 minutes for your entry here. So your 1 to 15 minutes is a good time frame for entry. I didn't say 1 minute, 1 hour to 15 minutes is a good entry for what? For a swing trader. You can enter from your 1 hour, you can enter from your 15 minutes. And you can go lower, you really need good risk to reward, okay? So now let's go back to our pounds USD. Now this is the weekly. So we are expecting price to trade to this point. We are expecting price to trade to this point, okay? So you go to your daily for setups. Do we have any setup here? It will be difficult to see a setup from the weekly POI. Why? Because the number of candles you can see we don't even have a break. Where we are going to get a break is this point here. Is this point. And by the time you wait for that, market has gone. Okay, maybe you now wait for a retracement to this OB, then you then wait again for confirmation in 1 hour. Okay, which is not how we want to trade. Okay, we want to be proactive. We want to catch this move. If not from this move, you should catch some moves and take it low. So in that note, since the weekly POI is what we are looking at here, and we are looking to sell lower, because the weekly and the monthly tells us to go lower. Remember, multi-time frame analysis. So therefore, we go to the 4 hours and look for what? Setups. Do we have any setups here? Okay. In this case, we have a break of structure here. Price came up, okay, and this is your entry here. This is your POI here. When price break this structure, you can see when price break this structure here, okay, it pulls back in, created an inducement, then took out that eye. But whatever it is, this move, you could have caught this move, be it an inducement or not, you have caught this move, okay. From here to here will have been a good move for you. But since you are a swing trader, you are going to know this is your 4 hour, right? And what do we say your 4 hour is your setup entry. Your setup entry. So since this is your setup entry, will you be able to see any confirmation in your 4 hours? When price left here, broke structure, you can refine this 1 hour here, okay, entry. Okay, so on that note, you wait for price to get in here. When price gets in there, that's your trade, okay. And where is our direction? Direction is lower, so you can start, selling from here. This will be your entry here. So when price trades into this area, your stop loss above, you're a swing trader, so that will be fine for you. Then you hold this price lower, and then you'll be in this trade. As a swing trader, you will have the tenacity to hold trade for longer, and then take partials along the way. So this is how you enter your trade as a swing trader, using top-down or multi-time frame analysis. Your monthly and weekly for direction, your daily and 4 hours for setups. Setup simply means areas where formation you want to see, and areas where you want price to trade in order to take your trade. Then you don't take that trade on that setup time frame, you take it in the entry time frame. And for a swing trader, your entry time frame is what? 1 hour. Okay, then from there you take your trade, and you can see the price moved if you've done your analysis well. Okay, now let's go to this one, the intraday. For the intraday, your weekly and daily is your direction. Okay, so let's go back to our weekly. You can see our weekly is telling us bearish, okay, because we are trading a new impulse leg. We are trading a new impulse leg, okay, a new impulse leg. But in the what's it called, monthly, we are trading a retracement. Okay, we are trading a retracement, you can see. And in the weekly, we are trading the impulse, because you are having a lower low, okay, lower high, lower low. So we're expecting a lower low to trade an impulse. So direction for the weekly, bearish. Direction from the daily. On the daily, we have a break of structure here. Okay, we are also expecting what, bearish movement. Okay, we're expecting bearish movement here. So our direction now is what, bearish. We want to go bearish on pound USD. Now, as an intraday, your setup will be on your 1 hour time frame. Let's look at it. Your setup will be, let's go back to, your setup is on 1 hour and 4 hours. Okay, 1 hour and 4 hours. Okay, so let's look at the 1 hour. We checked the 4 hours the other time. Let's look at the 4 hours. As price approaches, the problem now is if TradingView will allow us to go back. Okay, so without wasting time, let's look at something. So as price approach the zone, okay, first of all, we have to be very smart here. We want to use a bullish QM. You can see this is a low that took out liquidity. Price broke structure here. Price broke structure. Okay, as price broke structure, let's delete this daily point of interest. Now we're interested in this order block here. When price trades back into this order block, we'll be looking for what, to sell. But are we going to sell directly from here? No, because this as a intraday trader, the 1 hour is our setup time frame. Okay, is our setup time frame. So we wait for price to trade in here. Then from there, you go to your 5 minutes, okay, and below for your entry. So on that note, let's take this to, okay, let's just go to the 5 minutes. Will we be able to go there? Let's see. 1 minute, please. Okay, yeah, it is. I'm not going to use the replay feature, so let's just observe how we'll have entered the trade here. Okay, so now your 5 minutes, as price trades in here, this is the flow. As price trades in there, okay, we have we look for the same thing here, manipulation. Okay, because we don't expect price to trade above this. Manipulation, okay, break of structure. As price trades into this area, you take your trade. Okay, price comes back, create an inducement, The moment price trades above this inducement, you can be a seller. Okay, you can start selling from here. Stop loss above, either you put it above this 5-minute high or above the 1-hour high, then you aim lower. Okay, that is this your 5 minutes now is now your entry time frame. Okay, remember the market is fractal. Whatever you see as your setup formation, look for that setup formation in your lower time frame and then execute it. So that is that on the intraday multi-timeframe analysis. Intraday multi-timeframe analysis. Then the last one is scalping. For a scalper, you can use the 4 hours or your 1 hour for your direction. In this case, let's go to the 4 hour or 1 hour. Let's go to the 1 hour as direction. What is the 1 hour telling us? Okay, this is where we are looking at. Because we have a break here, so we're expecting price to trade lower. Okay, and we maybe wait for double confirmation. Okay, price trade lower, then we expect if price trades back into this other block here, will be what? A seller. Okay, so this is our direction. Okay, from here we want to be a seller. And remember, because you are trading the scalping, you're a scalper, doesn't mean you should not look at weekly, daily, and monthly. Okay, so that you have a higher picture of the direction. So in this case, we want to be a seller. Okay, then when price got here, okay, around this place now, we're expecting price to go lower. So our setup time frame is what? The 15 minutes for setup. So let's go for 15 minutes. Okay, so in the 15 minutes we'll be waiting for what? Confirmation, a break in structure. Okay, and as you can see, we have that here. So when price return to this what's it called, this supply zone, this is your setup now. You want to be a seller from here. Okay, that's what setup means. You've seen your break or shift in market structure, you've seen your POI. You might have different setup. If that one fail, you can decide to come up here, but in this instance it worked out. Okay, so from there you are looking for scalping. Is about you getting in and out of the market very fast. You are trading at the lower time frame, 5 minutes, 10 minutes, 15 minutes, you are done. You could bank in so much RR that you could be done for the day. Okay, so this is your trade setup. You want price, when price gets back to this 15 minutes supply zone, okay, or other block, you are looking for what? Sell. So in that note, you can go to your what? 1 minute. Can we go back to 1 minute? We cannot go back. We can't go back. So I went further to clear more data forward. So now let's see if this will work. So this is 15 minutes. We want price to come in here and then trade lower. So let's go to the 1 minute time frame. We still can't go. 3 minute time frame. Can we? 5 minutes. So since we can't go back the replay, but I would only use verbal communication here. Okay, but remember the market is fractal, and all you need to do is you look for your 4 hours. 1 hour will be your direction. Your 15 minutes will be your setup, where you want price to trade into before you execute your trade. Then once price is trading within that zone, you then go to your entry based time frame in that note, which is 3 minutes, 1 minute, and so on. Okay, if you have the second base, you can still use that, but I don't use the second base. My minimum time frame is the 1 minute and 3 minutes. Okay, so from there you look for whatever confirmation method you are using to take your trade, then you use that as your your entry time frame. So on that note, you cut some few pips and you're out of the market. So that is how you can, do time frame analysis. Okay, break it down into 3. Do not just look at all time frame and then you try to create a setup, a direction, and everything in one time frame. No, 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 no. You have a time frame for direction, you have a time frame for your setups, then you have a time frame for your entry. Okay, sometimes your setup direction can also be your entry. Okay, if I see a setup of 1 hour, I can decide to trade that on the 1 hour and still move it lower. But maybe because I'm looking for a better risk to reward, a lesser stop loss, and the target is still the same, so I can go to a lower time frame to refine that entry and get a very good risk to reward. So that's what you need to be doing on your multi-time frame analysis. So in that note, you will not be confused. Okay, remember, let's do a recap. Your directional bias time frame. Okay, either impulse, you want to trade the impulse leg, or you want to trade the retracement or a pullback. Then your setup time frame, which is your setup time frame? Is it the weekly, is it the daily, is it the hourly? You'll be the one to decide. Okay, traders are different. Okay, this is just an example of what I will tell anyone that comes to me. For a swing trader, your monthly, weekly is your direction, your daily 4 hours is your setup, your 1 hour is your entry. You can also enter below. Okay, you do not just stop here because Raba told you to. No, you go lower for a better risk reward. Intra, your weekly, daily for direction, 1 hour, 4 hours for setup, 5 minutes for entry, and your scalping. In this case, we were not able to go through the chart, but nothing is stopping the explanation. Okay, so that is that. If you have any comment, feel free, put it in the description, in the comment section. Sorry, if you have any comment, put it in the comment section. Let me know your thoughts and your opinion on this video. And if you so much like this video and this channel, like, subscribe, share this video on social media. Let more traders get to see this. And we want to build a community of what? Successful traders. If you want to take your journey faster and trade alongside me, I have started a private room trading where you will be invited to join me and trade alongside me. My setups, what I'm looking at, why I'm looking at that. I'm not just going to give you a trade setup. I will tell you the reason why, so that you will learn alongside. Okay, and it's a lifetime package. If you want to know more, click the link, the Telegram link in the description. Join the Telegram, you see the announcement, and also on Discord, you are going to see the announcement there, and the requirement. So the next video is about trading order blocks. If you want to trade order blocks profitably, this video is for you. I will see you in that video.